The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 9th, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe it isn't the mountains ahead that you and I climb that will wear us out, but instead it's the pebbles in our shoes. So let's do everything in our power to get rid of those pebbles on this terrific Thursday, and let's make sure that we overcome any obstacle that gets in our way. Of course, one of the best ways we can do this is to always remember that life happens for us, not to us. You know, and when we live by this principle, folks, we can find the gift in every set of circumstance. Yes, circumstance is like the wind. Learn to set a good sail and just simply sit back and enjoy the ride. And speaking of rides, how about this wonderful market? And oh, what a market it is. We've got bulls, we've got bears, and in many instances, we've got confusion. Of course, whenever you're confused, it really means you're about to learn something. So, hey, if you're confused, pick up that phone. Give me a call right now. Not in a minute, but right now at 877-927-6648. Internationally, that number is 727-445-1044, and I'll do everything in my power to assist you. You see, my two primary needs in life are growth and contribution. That's why I do what I do each and every day. It's become my life's purpose. So give me a call. Let me help you, and let's discuss the extraordinary tools that are in my toolkit. And in fact, you can share with me the tools in your toolkit, and our listening audience, well, they will appreciate that. Hey, it's terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're trading off about, 37 points. Trading out at 16,859 or so. S&P down about 4 at 1957. NASDAQ off 6 points this morning, trading out at 4,024. Russell's kind of flat, maybe down a point or so. King Dollar back a nickel right now. She's trading out at 85.35. Goldilocks up $21 up there, trading at 12.27. Silver up 40 cents, up to almost 2.5% this morning, trading out at 17.47. Light sweet crude struggling. That is the weapon of destruction being used, I believe, mostly about Putin. I think a lot of folks have a different take on it, but that is my take out there. It's trading out at 86.80. If we take a quick peek across the globe, we should have handed the ball off pretty nicely to Asia last night. But, hey, what's the deal here? We had the Nikkei down 117 points. It closed out at 15,478. The Hang Seng up 271. It liked that handoff out there, up over 1%. Shanghai up 7 points. That's 0.25%. Over in Europe this morning, a little bit of a mixed bag. Over in Germany, looks like they are off to a nice Oktoberfest. It's up 27 points. We'll go see what it really means on their stock chart. The FTSE down 18, trading at 64.63. Again, our call number is 877-927-6648. Let's start off by taking a look at the FTSE here. Let's take a whirl. Let's take a twirl. Let's take a ride around the world out here. How about that? Let's take a look at the FTSE. What are we going to see on the FTSE? Hey, if you're watching this on TigerTV, it couldn't be any more clear than this. The FTSE looks a lot like what? Looks a lot like your Russell 2000 out here. What I mean by that is this has been in a long-term consolidation pattern. This consolidation takes us back, actually, not even as long as Russell, but this consolidation pattern takes us back to December 12, 2013, down around the 64.36 type level. What we can see here is that this morning we have seen the FTSE spike down to test that level. Hey, did you forget to send out the memo to the FTSE that we're forming a bottom and the market wants to rally and we want to take all of our friends along? Looks like they maybe didn't get that memo out here. But, of course, they have not broken through that consolidation. It's a 430-point consolidation. The top of the consolidation box, somewhere around the 68, 67-ish type range. It couldn't be any more clear than this. If the FTSE breaks below 64.35, I don't mean 64.34, I mean breaks below it. And right now, it's actually been moving lower with less relative weakness out there. So that has got to make you say, something to think about. Nonetheless, if it does break below that level with any kind of conviction, you're looking at a 430-point move to the downside. So even though you may not trade the FTSE, if you believe this is a one-world market, and to a certain extent it is, you want to pay attention to that FTSE out there. So we'll be watching this 64.35 type area. No, the markets are going to do one of three things. They're either going to move sideways. That's a consolidation. And a large consolidation like this is a beauty to be able to play out there. Small consolidations, they make it a little bit more difficult because the risk-reward just simply isn't there. You're risking too much for such a little reward. But large consolidations, hey, the back is up against the wall of the FTSE. You can flip to either side of the market out here. Large consolidation. So market's either consolidating, moving up or moving down out here. So and it's so important for you to be able to understand which it is doing out there because it'll impact your trading system or your trading decisions, or it should. Now let's go take a look at the DAX in Germany. Let's go see what it is doing. Oftentimes some people think that the DAX is trading a little bit more like the NASDAQ out here, but I would have to say, hey, not so fast. Looks to me like the DAX is in its own consolidation pattern out here, and it's a large one. It's 1,067 points, give or take a few points. 1,067 points. If, in fact, the DAX breaks through the bottom of the consolidation, in this case here, it would have to be its August 8th swing point to the downside. It says the DAX could be looking at 1,067 points to the downside. If it can't bust them down, then what's it going to try to do? It'll try to bust them to the upside. At this stage here, the DAX has not had that same kind of candle configuration that we've got in the market. So we want to be paying attention to the DAX as well. Right now, it has tested the August 8th swing point. It has not rejected the August 8th swing point. It is still trading with inside that. Now let's go take a look and see what's going on over in Asia. If we take a look at the Nikkei, as I mentioned, it traded a bit lower last night. The Nikkei, how could this be? The Nikkei's got its own consolidation pattern. It's 2,275. Well, it says 74 on my screen, so let's go with that. 2,274 points out there. That's a big consolidation. But, hey, folks, it's nowhere near the bottom of its consolidation. It's just simply inside a rising price channel that began back on May 21st of 2014. So price just moved back to the bottom of that rising price channel. If it breaks it, then it says that price ought to travel down into its August 8th swing point. But if we take a look at retracements from August 8th, to the high that this had in it back on September 25th. Hey, it has not even done a 0.618 retracement level. Next price point, 15,372.79 out there. That is what's going on inside of the Nikkei. Let's go check out the Hang Seng. Let's go see what it was doing, up 271 points as we open up this stock chart. Hey, what's this? No consolidation pattern. How'd that happen? No consolidation pattern, but it's in its own little rising price channel out here. It has not broken through that. Right now, it's doing a bit of a retracement. Let's go see what kind of retracement she has done here. Of course, we know that the Hang Seng, it took a bit of heat out there. I haven't even heard much about the protests in the streets. And maybe they've all quieted down. So far, what the Hang Seng has done is a dead cat bounce, a 0.382 retracement. But if it does break the bottom of that the bottom of that rising price channel, we can expect some lower prices, maybe even an A to B equals CD to the downside. Let's finish this off. Let's go take a look at the Shanghai, up 7 points last night, and then we'll move on to our markets out here. But it's important to understand really what's going on around the world. And as we take a look at the Shanghai, you're going to notice it has its own consolidation pattern that it broke out of. It was a 289-point consolidation. It broke out of that pattern on September the 3rd out there. It is up and away. You can add about 300 points to 2368, and that will get you to 2660 or so. And it looks like that is where the Shanghai is headed to. Now, it's off to our markets out here. Let's go see what do we have going on inside our markets. Let's go take a look at maybe an intraday chart out here. Let's do that. Let's go take a look at the let's go take a look at the NASDAQ. Let me pull the NASDAQ 120-minute chart up on my screen. Now you're going to see all kinds of lines. I'm going to turn some of those off, and then we'll just simply add those back here. Well, we're first going to take a look at, there we go, boom. Those are now off. How about that? One quick move of the fingers, and it is off. Now, what we're taking a look at here, here's the NASDAQ, here's the 120-minute chart. Oh. How about that trade setup that I gave to all you yesterday? Should we put that up on the screen here first? Yeah, let's do that. How about this? Remember, we were on the air, and Stevie said, you know what we'd really like to see is a push below this little candle session that took place at 5:15, and this was on Tuesday. We said, hey, that low out there was 39.48. What we really wanted to see was a move down, give us that seventh wave out there in that beautiful Chapman wave pattern, and then we said what? We said, hey, we'd really like to see it move down with what? Less relative weakness. Get one of those Stevie Rhodes momentum indicator signals going. And did we get that? Oh, boy, did we get that. The market was listening to us. It was answering our prayers from a trading standpoint out here. Take a look at that. Not only did it give us that, but by 11:30, this is a 30-minute chart that we're looking at on my screen out here. It gave us that and then some. Gave you that nice big bullish engulfing candle, moved right up into the TAS market profile, point of control out there. And then as soon as she broke above its resistance level, and that took place at 1:30 in the afternoon, it was off to the races out there. So you got to like that. Now let's go back to that 120-minute chart out there. Remember, I said all you got to do, and that meant that what we all had to do, because we were looking at that trade setup, right, ahead of time, we looked and said, this is what we would like, and if the market gives us this, the reward to risk becomes very, very simple out there. And boy, did the market deliver. It delivered before the Fed came out with their minutes. I mean, come on, folks. All we had to do was just read the charts out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, a lot of folks out there are going to say, hey, yesterday's market, it was really all about the Fed out there. But I have to ask you, what time was it that the Fed released their notes out there? Wasn't it something like about 2 o'clock in the afternoon? And if that's the case, and you just simply were trading patterns, and you just simply didn't trade any news, you just cleared it out of your head, you just said, I'm going to trade these patterns out here, I'm going to look for these patterns, I'm going to put together a set of tools that all of the great, wonderful folks at TFNN provide us with, and you're going to put all that together. Well, putting all that together gave us every indication that we needed at 11:30 in the morning. You had a confirmation at 11:30 in the morning. Of course, you could have just simply waited for prices to get above those profiles out there. My experience on the profiles is that they're not going to be able to catch the bottom of the move out here. They're going to be helpful with regard to momentum that is taking place out here. And the nice thing about about utilizing the combination of tools here, and this is the 30-minute chart we're looking at. If you take a look at that point of control yesterday, how close it was to the resistance level, it said that the sellers really should still be in control. And once that area was busted, their backs were busted out there. So the signals were not coming. Look, maybe somebody knew something early, right? Does the market always know something early? Yeah, let's just say that it does. And it gave us the signals out there. If we take a look at where we're at in the 30-minute chart here, and we just simply go ahead, let's count up, let's go see where we're at on the way up out here. Let's go fill that in. So you got to that fourth wave, right? You did that at about 4:30 this morning out here. And as that was taking place, it was running into resistance of that TAS market profile. That came in at 5:30 this morning. That said that your stop inside the NQ just simply needed to be somewhere above the 4,000 and a 48-ish type level out there. Now we've seen a bit of a move down. Now what I want to do is I'm going to switch over to the 120-minute chart out here, because when you take a look at this chart, and if you're just listening on the radio or your mobile device at TFNN.mobi, we can't thank you enough for doing that. Don't forget get the archive of this show on Channel 9. You can catch the live stream. Hey, just go to the homepage at TFNN.com. You'll see that live stream right now out there. And of course, on your upper right-hand side of that screen, you'll see a little button. You can watch that on your your mobile phone, the full Monty, the full live picture out there. And so here's the key. We're taking a look at a descending price channel that was established out at the highs back here, and that was on September the 19th. And what we saw here yesterday is price hit that level, and it hit it with a wide-ranging bar, and markets don't end on wide-ranging bars, nor did it out here. And as we take a look at this, we can see here that price just simply traveled a bit higher. And this morning, during the 6 a.m. session, 6 a.m. to 6 to 8 a.m. session, 2-hour session out here, guess what? We saw prices careen down and test the top of this descending price channel. What you'll also notice on this chart here is take a look at that September high out here. What you can see in play is a lot of A to B equals CD down patterns, right? You can see that 1-to-1 that had formed at the bottom of the price channel. That was on September the 25th. That was your first A to B equals CD to the downside. We can take a second A to B equals CD to the downside as soon as Stevie activates the tool out there. Here's your second A to B equals CD, right? It hit that at the bottom of the price channel, and it did that at about 4 o'clock in the afternoon, October the 1st out there. Then we saw a little bit of a push lower. It rejected that. Price rejected that. It got back inside that price channel out there. And now what we want to watch, if this is a market that is going to, remember, Stevie here is calling for a significant bottom. A significant bottom. The kind that Santa Claus wants to deliver to you. However, there may be some coal along the way. This could be a very ugly, choppy, confusing bottom. And at this stage, that's what it is. How will we know if things have really shifted? Well, we'll know, number one, by taking a look at what? An A to B equals CD to the upside. And what that should mean here, prices come back. So there's a couple different patterns out here, right? We can see price inside the NQ is pulled back. It's tested the top of that descending price channel as it should. If it rejects that area and moves higher, that could be setting up the next A to B equals CD to the upside. Let's take a look at possible retracements. If we go from yesterday's low to the high that was put in here early this morning. Hey, a dead cat bounce takes you to 4,003. A 0.618 retracement takes you to 39.75 out there. And then if the market moves to the upside, breaks out of the ascending price channel, starts to make A to B equals CD patterns to the upside, then and only then can we really say that the bottom is in. That's taking a look at the 120-minute chart out there. Of course, many of you might be saying, hey, Steve-O, what the heck are you talking about? Go take a look at the, you're talking about the NASDAQ. Go take a look at the NASDAQ. What kind of candle did that form yesterday? And I'd have to say, that's a PDQ. PDGQ. Pretty darn good question. We come back. We'll see how these markets are going to open, and then we'll go answer that question. This is Steve Rhodes. This is TFNN. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 49 points, trading out at 16,944. S&P down 4 at 1964. Composite off 7 points at 44.61. Russell 2000 off a couple points. The DAX up 89 right now. The FTSE turned well, that was weird. The FTSE had, now I got stuff all over my screens out here. The FTSE, sorry about that, folks, is up 5 points out here. Hey, lead the charge to the upside. You got Auxilium Pharmaceuticals up 10% this morning, up $3. Impacts Laboratories up 11%, up $2.79. Tesla up a couple of bucks. United Continental up $2.60. Gentiva Health Services, lost my chart. Very interesting. Let's see what I can do here to get this back and populated out here. Let me know. Hopefully the chart is back up. That's something weird going on my screen, in my ear, and the whole bit out there. Hopefully I'm getting a thumbs up somewhere. Let me know if you can see my charts there. Alakazam, Alakazoo. Hey, to the upside, we've also... I got no, okay. I've got, we got GoPro to the upside, up 2.5%, up $2.30 out there. Oh, really weird. Lost your chart. I'm sorry, folks. I want to make sure that you've got the charts and everything. So I think it's posted. Okay, I've got a message coming in to me. Let me keep this going here. I'll just keep talking and we'll work through it. You've got Mobileye. That's up 2%, up $1.15. Okay, Larry, I have your chart here. Okay, we've got Ruby Tuesdays up $1. That's up 17%. Hey, to the downside, the Gap looks like maybe gapping down 11% off $5. You've got Endo International down 3% off a couple of bucks. Royal Dutch Petroleum off $1.94. And it looks like we got a match between Sandy Koufax and the Babe out here. Looks like Sandy Koufax is on the mound and might have thrown a pitch that was hit out of the park because you've got KFX is the ticker symbol. That's down 23% as we speak. What is the reason behind that? They're expecting revenues of $67 million. Let's go take a look at Sandy Koufax out here. Let's go see what it is doing. Not a very liquid stock. Normally trades, it looks like maybe 100,000, a couple 100,000. So I guess not too bad out here. Nonetheless, this thing is breaking swing points. Looks like it's doing it with volume. Oh, that's too bad. Looks like Sandy Koufax was a IPO, taking it back to December 15, 2013, and now there's only bleeding hearts inside of this equity as it's trading at $5.97. This thing had been up as high as $9.40 or so, $9.42, $9.40 on June the 16th, 2014, and now it is at its lows out there. Let's take a look here at, let's go back. So I asked the question about the NQ, or I said you might have a question about it, so I threw that out there. So let's go take a look at yesterday's price action out here, because it is really important to pay attention to. And we can go back and take a look at those price channels inside the 120-minute charts as well out here. If we take a look at, and I'll just start off with the NASDAQ Composite, since that's what I threw out here. You'll see this basically across the board as you take a look at every single index. So remember, Stevie is calling for a significant, not a bottom, a significant market bottom, the kind that's going to take the market up through the end of the year. So I'd start getting out your Santa gear. You can throw that coal away out there. And if we take a look at the price action out here, take a look at yesterday's candlestick, hey, it's going to be choppy. It has been choppy. There's no reason for it not to continue to be choppy, maybe even for another week or so. I don't know. We'll watch these different patterns out here. But, hey, yesterday, Fed or not, right? We took a look at the market information that came into us, before we went out, as we were doing the show at 9 o'clock in the morning. And it wasn't until 11:30 that we actually got that confirmed signal out here. Well, take a look at the confirmed signal we got yesterday in the composite, in the S&P, and the New York Stock Exchange, in the Dow, in the Russell, in the you name it. We got it out there. Hey, how about that? How about that gold sector? Well, take a look at that candle configuration. Hey, that's a bullish engulfing. It is a key reversal session. You might be asking, when was the last time we saw a key reversal session? So maybe we'll go through the charts and we'll go try to find that. I will tell you the very last one inside of the NQ of any significance. That took place right here on April the 15th. April the 15th, 2014. You tell me whether or not that key reversal session put in a bottom out there. And was it a bit choppy? Yeah, it was a bit choppy. The market really moved sideways up until about May 23rd. So it was about 5 weeks. 5 weeks, folks, worth of a kind of a consolidating type move before it took off. But it was really that signal on April 16th, or April the 15th, I should say, that really gave us the message. Let's go out to Texas, to our man, John. John, thanks for calling. Thanks for holding. How you doing this morning?
Way too good. How about you, Mr. Steve?
Oh, well, I like that juice that you drink every day. That's good juice.
You're the same way, buddy.
Yeah, absolutely. Is there any better way to live?
No better way. Exactly. That's the only way to live. Yes, sir.
Absolutely. All right. You want to take a look at Goldilocks. Tell me what you're doing, how I can help you.
Well, I'm thinking about scaling back into, ANV and the silver sector also. AG looks so strong, and, all of the equities just looked like they came off the bottom yesterday.
I would say with conviction. I would say, as Tom likes to say, with wide price spread and conviction behind that move. And Tom always is looking. He's always taught us, right, to look for a sign of strength, and we got that sign of strength absolutely yesterday. Now, what he likes to do, and I'm not, what he likes to do, what he will teach is to, buy a retracement off of that sign of strength out there. So specifically, let's take a look at one or two of the ones that you were mentioning. I think you mentioned maybe Allied Nevada?
Yes, sir.
Okay. So in the case of Allied Nevada, and you're thinking of scaling into it, what are you looking at out there? So Allied Nevada is trading out right now at about 263, I think. Is it Allied Nevada? I wonder if there's something wrong with my chart out here, because there's something that's too weird. So I'm going to have to try to.
I'm sorry, 272 is the bid and 278 is the ask right now. For it, but it will obviously change when the market opens.
The market's open. I don't This is really, it's really strange. I normally don't have a bad data feed like this. Let me try to switch to something else here. But so the answer is yes, I think you should be getting into the gold sector.
Okay.
Into the gold mining equities. I absolutely think that yesterday's message that we saw clearly across the board, it wasn't so much that it was a reversal. It was a reversal with wide price spread and accelerated volume. So I believe that the mining sector is a place that you absolutely want to take a look at. And because we had such wide price spread, scaling in sounds to me like a great option.
Okay. Would you start scaling in now? Or would you, like Tom says, do you see a retracement? Because if it's possible for you to take a look at a couple of, A and B, if you can't do it in EXK, and if you can't do it, buddy, I can call you another time.
No. Well, I want to do it. It's just so weird that the eSignal software here is not giving me the accurate data. I'm opening up another chart while we speak. There we go. So at least the other chart here we can use. So I don't know what was going on there. So I've got no, I don't. I've got Dow Jones. You don't want to know about the Dow. You want to know about A and B. Okay.
Hey, buddy, welcome to computers, right?
Yeah, now this is weird. Actually, would make it very, very hard to trade. Son of a gun. Yeah, well, no, I've got yesterday. Okay, so in the case yesterday, it doesn't look like I don't have the volume on this chart out here, but in the case of ANV, look, your stop needs to be under yesterday's low, in my opinion. So whatever you trade, when you take a look at scaling in, one of the things you've got to really do is take a look at position size. And the way that I would recommend that you would do that, John, is you would, let's just say you're going to allocate 1% of your trading capital, or 1% of your trading capital from a risk standpoint to any one trade. And maybe because you want to buy a couple of equities, maybe you're going to take that 1% and you're going to separate it in between 2 or 3 equities, because that's all you really need to risk on a trade. And then it's all about identifying the position size. So let's just say, as an example, you bought right now at 261. And let's say you had $10,000 in trading capital. That means 1% is going to be $100. So I'm just going to use this as if we're going to do $100. So $100 is all you're risking. So that $100 risk, I would say right now, if you bought it at 261, your stop needs to be below yesterday's low. That's at 229. Figure out that difference. So that's about 30 cents. Take the $100, divide it by 30 cents, and I would say you can buy 300 shares. And that's how I would take a look at putting on a position out there. Keep your risks to 1% or less, and keep firing back, in a sector, as opposed to not having a stop in place, getting your stop taken out and wondering, should I or shouldn't I exit the trade out there? And I think that's what you need to do on all of these equities. Give me another one that you were looking at. So first on the position size, does that assist you at all?
Absolutely, sure, absolutely.
Okay.
Your expertise is always great, Mr. Rhodes. I just so appreciate it.
Well, thanks. So what was the second one that you wanted to look at? You're too kind.
EXK, please.
EXK. We take a look at EXK. Now that looks. I don't know where today's. I don't know why today's feed, but EXK looks better, at least with regard to because yesterday was a true key reversal session inside of EXK. So to me, that actually looks better. Let me do this here. Let me just change my template on my screen out here. That'll give me a little bit more information. Okay, so if we take a look at EXK, you had nice wide price spread, accelerated volume yesterday, key reversal session. Same thing is in place. Your stop needs to be somewhere below 391, in my opinion.
Yes,
and
sir.
so you'd scale in, whether you bought some now, you bought some, maybe you bought a retracement. What I don't know, and I wish I had that crystal ball that could tell you what the exact price is, to come in on. And since I don't worry about that as much as, you like to have the exact entry price right, but I don't get too hung up into that. Instead, what I want to do is use proper money management out there. Because if, in fact, gold and silver and the mining equities have hit a significant bottom, which I believe that they have, even more so than the market out here, if they've really hit a significant bottom, a few pennies is not going to make as much of a difference. What would make the difference is if you use poor position sizing. So
Yes,
scaling, I think scaling in is is an excellent idea, and you'd use that same principle. It's trading at 437. Your stop would need to be somewhere below 391. So you're looking at about 60-cent stop, and on $100 risk for every 10,000, you're looking at it's probably what would be $100 divided by 60 cents? It would be about 60 shares, something like that.
Yes, sir.
So something around that range. Now, if you're going to use a basket of stocks because you don't want to get too overweighted, the other thing that you need to look at, John, is make sure that the total value of what you buy. See, we're controlling risk by using stops, but you also don't want to have, let's say, more than 10% as a guideline of your total capital in any one individual stock out there. So just make sure when you multiply the number of shares times your capital that it's not more than that, and you just kind of adjust from there. I would say in the case of EZK, your target's going to be the swing point from August 9th out there. So if this is a bottom, and we got the signals yesterday, we couldn't have gotten a more clear signal yesterday. And of course, as you know, this is all going to be based upon what happens with the U.S. dollar index, what happens with gold out here. But I do believe that we're seeing a nice bottom. And you just have to pick your points of where you want to go ahead and enter.
Yes, sir. Would you think that the retracement in these things, they wouldn't be any more than like 3 or 4%? Would you guess that may be correct? I mean, I know you can't. You don't have a crystal ball, but just in theory.
Well, I used to have a crystal ball, and I threw it out because when something's just simply not working, you just simply get rid of that thing, and you say,
exactly.
But in the case of EXK, let me try to pull this up and see if my data feed here is a little bit better. Okay, good. The data feed here. When you take a look at retracements, that didn't work. When you take a look at retracements, you just what I like to do is just take a look at normal Fibonacci retracements out here. So that means I'm really just taking a look at yesterday's candle session. So from low to high out there. Your 0.618 retracement, that didn't work real well. Your 0.618 retracement out here would take you to $4.17. 434 is your 0.382 retracement, and we've hit 434 basically. If that's all that EZK does on its pullback and then it moves up from here, then it's another message of an extremely strong, powerful move to the upside out there. So your normal retracement levels to scale into a position that you could take a look at, 434, 417, 406, and then the ultimate is that it pulls back into yesterday's low with light volume and rejects that area because you've had your sign of strength. And as long as you use money management and you get a stop below that 391, I think you're okay. It's a good reward to risk opportunity, in my opinion. Whether or not EZK is the better of the equities versus some of the others, that I haven't gone through all 30-plus equities out there. But I think you're playing in the right sandbox.
Buddy, all the best to you and your family. Thank you so much for your time. I so appreciate it.
You bet. Thank you, John, and have a great day. Well, John's going to have a great day no matter what. That's something that we know, folks. This is Steve Rhodes. This is TFNN. I'm going to have a great day, too. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
For
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 7. The S&P is down 8. NASDAQ Composite down 21. Let's go back to those 120-minute time frame charts. We only took a look at one out there. But let's come back and take a look at it. So if we take a look at the NASDAQ at this stage here, not really much in the way of any significant change out here. Still testing the top of the descending price channel out there. No A to B equals CD pattern or anything like that. Nothing to the upside out here to let us know that a change in trend has taken place. If we take a look at the Dow futures out here, let me turn off all of the horizontal trading range boundary lines on there, and maybe we'll take a look at those during the next show out here. But let me turn those off for the moment. And if we take a look at the Dow futures, now by the way, the price channels that I had drawn in here on this chart, these were drawn in days ago. So, I just simply, I've been developing an offshoot of Bud Rolf's. Bud has taught us about primary trading ranges, and thank goodness that he's done that. Now, with the power of automation, I've taken it one step further, and really instead, because it's a different way of taking a look at these horizontal levels, my program is different. So I'm just simply going to have to call it horizontal trading ranges out there, and we'll take a look at that. And good folks over at Traders Formula Consulting Group have been assisting me in doing that. And in this case here, what we're taking a look at right now is a 120-minute chart here for the Dow futures. So what was interesting is when I went ahead and opened up that screen this morning, I was kind of like, oh, yeah, hey, how about that? Take a look at this. And the Dow on the 120-minute time frame punched through its descending price channel. What we've seen here take place thus far is nothing but more than just come back and test that area. Now, the last time that we saw a test of that area and it failed with price getting back in it, which was back at about 2:30 on October 7, we saw it move all the way back down to the bottom of the range. What was interesting here about yesterday's move lower is it almost like it was to the tick at the 10:30 to 12:30 time frame. Out here, the candle went right down and tested the bottom of that descending price channel again. This channel was drawn in. I didn't draw it in the last hour or not in the last couple days out here. It was drawn in earlier. It was drawn in way back here, probably around September 25th or so, maybe September 30th. At the earliest. We're October 8th out here. So that's what's going on inside of the Dow on the pullback. If it gets back inside here, it says a retracement of some sort is underway. So it's doing what it's supposed to do inside the Dow. If we take a look at the ES Mini, let's go take a look at it. And if you're asking the question, hey, when do we have a breakout? Well, inside the ES Mini, you'll see that price is also above its rising or descending price channel. It's got a ways to move back before it really tests that area. The market had gotten a bit oversold here, or overbought, I should say, in the October 5th time frame for about 6 in the evening up until the open at on October the 6th out there. So price should pull back into that level. If we take a look at retracements out here from low to high, the retracement so far, it's headed back to its 0.382 retracement level. So no different than what we looked at when we were looking at gold out there with John and take a look at an equity. Your first retracement level is always going to be or should be that 0.382 level. That's 1949. You break through that. That says your 0.618, which is 1937. And in order to get down to 1937, the ES Mini out here would have to get back inside that descending price channel. So those are the levels that we want to observe out here. This is going to be a long, arduous, choppy, nasty, but very, very good bottom when that bottom is finally put in. And yesterday's market action is very significant from a number of different standpoints because the lows from yesterday should not fail. And should those lows fail, they'll be sending an important message to both you and I. Just as a move above 1966.50 inside of the ES Mini, that'll be telling us it would be long and strong. Well, folks, it is Terrific Thursday. As always, thanks so much for joining us here at TFNN. If you're off to start your day, have a great Thursday. We'll look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.